As the markets convulse on the minute-by-minute headlines out of the Middle East and investors hunt for clarity, joining us now in a Fox Business exclusive, live in studio here in D.C., former Treasury Secretary and former Goldman Sachs CEO, Hank Paulson. Welcome, Mr. Secretary. Thank you for being here.
Liz, it's great to be here.
Well, you may not think it's that great, because I got a million questions for you, and our viewers definitely want answers. Let's start with oil. Oil is down today, but still well above. In the 90s, it's well above the $67 a barrel price that we had before the war. You got to tell me, are you viewing this as an inflation spike that is temporary or longer term?
Well, Liz, you tell me how long the war is going to last, right? And but right now, even on a temporary basis, because, you know, if it lasts a long time, it'll be a much bigger impact. But on a temporary basis, when we look at what's being impacted, you've got to talk about jet fuel, diesel fuel, gasoline, you know, the deficit, the dollar, the military spending, all of these different things. So what do we know for sure, right? we know for sure that there's going to be inflationary pressures. We're going to see, you know, certain industries are going to be hit harder, right? Airlines, farmers, what that's going to mean for food. You know, military contractors are going to do better. But we know inflation is going to be higher for longer, for sure. We know that, okay? And so we can look at the winners and the losers. But the one thing I can tell you is our economy is better able to withstand this shock than any place else in the world. So the thing that I'm looking at is disruption elsewhere spilling over into the U.S. economy and dealing with financial shocks there.
Well, okay, let's start with some disruption elsewhere. What do you mean by that? Do you see anything that looks sort of bubbly? And I'm thinking continuing to see so much spending on AI. I mean, this may sound quaint at this point. It may have gotten a lot higher, but $650 billion this year expected to be spent by the hyperscalers.
Yeah, well, I look at AI in two different ways. First of all, huge spending, and that driving stock prices, and a big difference between spending and earnings, right? And so I think the chance of a price correction there, I think, is significant. You've got the circularity,
right?
So you've got, you know, providers of tech investing in customers and customers investing in suppliers, and you've got no transparency. And so when the correction comes, you know it won't come at the ideal time. It's going to hit certain harder than others. But to me...
Do you foresee a correction?
Do I see a correction? How does anybody see a correction? I think it looks to me like a correction is going to need to come, right? And when I look at AI, the thing that I'm even more concerned about is job, you know, loss. Because I think there's a real possibility of there being significant, maybe tens of millions of jobs lost. And to me, we should be preparing for that.
And I know I'm mixing AI with what's going on in the energy world, but earlier, and it was just in the last hour and a half, that both Dow Chemical and ExxonMobil warned that they are raising their plastic prices because of the Iran war. And that's because oil goes into plastics and just about everything else.
Other industry I should have hit, it was petrochemicals are going to be hit hard, fertilizer, obviously. And so we could just go through sector by sector and look at where the cost is going to be and the inflationary pressures. But I still say, despite all that, our economy has been a model of resilience.
Okay, well, the Federal Reserve is looking at this very closely, and the inflation picture has them concerned. You navigated the country through the great financial crisis. As the former secretary who's dealt with all kinds of shocks before, great financial crisis is among the biggest. Right now, Jay Powell has indicated that he and the Federal Open Market Committee don't think that a rate cut is in place, is necessary at the moment, because that would stimulate even more spending. Is he right?
Yeah. Listen, I'm not an expert on monetary policy, but I believe he's right. I believe he's right. And I tell you, the Fed is very important right now, because having an independent central bank is a best way to manage inflation and increase confidence in our dollar right now and in our financial system. And at a time when we're piling up debt, we really do need this. So I think a lot of, and I'm a big fan of Kevin Walsh. You know, worked with him during the financial crisis. He's a real pro. He understands markets. He understands investment principles. But his job, the key to his job going well, is how that transition with Jay Powell goes, right? Because as far as I'm concerned, Jay is a model of credibility. He's been a hero. He's done things right. And so how that transition goes and how the administration handles that will go a long way toward how successful Kevin is going to be able to be. And as I said, the one thing you want to go well is have confidence in the dollar and at the Fed at the time we're piling up debt with our deficit.
Well, President Trump has made it quite clear that he doesn't like the Fed chairman, Jay Powell, and he has called him a lot of names. He really would like to see rates cut. Is that going to be a difficult position, considering we're seeing inflation at the moment, for someone like Kevin Warsh to say, you know what, Mr. President, we have to stay put? And I would tell you this, last night I was at the semaphore dinner at the Jefferson Library. Scott Bessent, the current Treasury Secretary, outright said, and here's the quote, he said, I think the Fed is doing the right thing by sitting and watching.
I agree. So Scott Bessent and I agree on that. And I think, as I said, independence is important in the perception of independence. So how that transition goes is very important at a critical time when our debt is piling it up at such an incredible level.
Let's talk a little bit about private credit, because this is still very much an issue, but it appears, at least when you talk to people who are in it, that it's ring-fenced. Of course, maybe that's just the fox guarding the henhouse, or better example, whistling past the graveyard. But the blue owls of the world, all of that, you having been through that 2008 drama, the risk nearly broke the system. It was very much in plain sight. I mean, the mortgage crisis, et cetera. This is a little bit more hidden. You've got a multi-trillion-dollar market in private credit, very little transparency, less liquidity. Investors are flooding these names with redemption requests. They want their money out. Yeah. Do you see any kind of longer tail of a problem?
Yes, Liz, but we're not going to know until we go through the cycle. I've thought about this a lot, and in some ways I see an advantage, right? Because when you have regulated institutions, the banks, funding long-term credit with floating rate debt, what happens is the regulators hit them as you go through this. So they're forced to sell. Who buys? People in the private credit market. Then they hold those assets, right? And so in some ways, you don't like to see all of this in a shadow market where there's no transparency. But I will tell you, and I really believe this, we're not going to know until we go through the credit cycle, right? So it can be a good thing, but so tough. One of the things we learned in the financial crisis, too much of a good thing can be a real problem.
Let's talk about China, because China is very much in your bailiwick. You had always advocated for a responsible relationship between the U.S. and China. Right now, the tariffs take square aim at China. President Trump is expected to meet with Xi Jinping. He's spoken very highly of him. He has said, he wants to talk to him. However, today, the Chinese have, as I said, called the blockade irresponsible and dangerous. And Edward Lawrence is reporting that Fox Business obtained a letter from the Treasury Department that has been sent to banks in Oman, the UAE, Hong Kong, and China, placing them on notice for dealing in illicit activities with Iran. What kind of meeting is this going to be like next month between Xi and President Trump?
Let me say this. The meeting won't take place if we're back into war. But the Chinese are very interesting. They've been saying, please don't do this with Iran, but come on over here, right? And so we're in a situation with China, a very consequential, our most consequential bilateral relationship. They are intense competitors with the economy, excuse me, and their adversary when it comes to military issues. But let me tell you something. Our economies are so closely integrated that we are in a situation that I would call a mutually assured economic disruption. Because what's happened now, each country knows the other can do things to really disrupt their economy, right? And they know that, and no country can afford a trade war right now. No country can do that. If this spins out of control, it's going to go through the economy. So I think where we are And here's what I'll say about when they come over, what we can expect. Let's just remember, Liz, that this will hopefully be the first of 4 meetings.
Okay.
And right now there's a huge trust deficit. But what we know is both want stability, right? And so the emphasis, don't expect a big breakthrough. Expect the Chinese to welcome him, with all the pomp and the ceremony and the symbolism.
Okay.
And then expect an emphasis on stability. And I think what we're going to see is we're going to see mechanisms for managing trade so it doesn't spin out of control. We're going to see mechanisms so there can be more cross-border investment. And the biggest thing we need to get out of this is put in place guardrails so we each understand the other's red lines, we can compete, and we don't get into a trade war.
Well, that would be great. China has proven they go through those red lines and they cheat in many ways, but we shall continue to watch it. Thank you.
Yeah, we sure shall.
Treasury Secretary Hank Paulson, who served under George W. Bush. It's wonderful to have you. It's a rare interview. We appreciate you coming on.
Thank you, Liz. Good to be with you.